Okay, but when it gets then to, you have small things like that, but the real money, I mean, because our budget is like $39 billion. And so
where would you address the money?
So, because I mean, so you have, okay, Health and Human Services, you have the school aid fund, you have the revenue sharing. Now, I'm a strong advocate for increasing the revenue sharing that is going to our counties and our cities, municipalities, city, village, townships, because I do think that those local investments in our local communities are much more.
Are you talking about?
Yes.
Everybody in the state, and I'm showing you my ignorance here, but what I think I just heard you say is all the tax money that we pay in at the state level then gets redistributed and given back to the counties. Why don't we just give it to our county? Because what I want in Livingston is different than what Traverse City needs.
Yeah. And that's
Clare County has a completely different set of stuff.
Well, it's because of what the state government has to do, like the Health and Human Services or the school aid fund. Mm-hmm. This money does have to get to the state level buckets to then disperse out.
Yes.
Almost like a title company. You need one entity,
clearinghouse,
to then disperse the funds.
A settlement agent.
And so, when it comes to something like revenue sharing, you have the constitutional requirements. Okay, so a small portion of the marijuana tax is going into the bucket that is, constitutionally required to then be shared with the counties and municipalities. But then there's also a small portion that's going to the general fund. The general fund is the catch-all bucket that then from there gets dispersed mostly for the Health and Human Services. But a small portion goes to the higher education or the revenue.
Okay, so
I'd say that's an accurate description of how it goes.
Is that a population-based dispersal?
For what?
Well, I don't know.
For the state
if
fund?
the state has the money, and then how do they decide who gets it all? Which county gets
every
it?
bucket has formulas and every
And I think-
appropriation.
Yeah,
Yeah.
and with
That
how
can get funny.
with my sales tax idea, what would happen is, say Cleary's Pub would pay all their sales tax to the county, and then the county would pay a portion to the state. So, in the vast majority of your money would stay in the
So
county.
instead of a top-down
It would be a
dispersal of
bottom-up.
funds,
But right now, the sales tax is primarily going into the bucket for the school aid fund. I mean, that is where our sales tax dollars are directed to.
But I thought that was
Supposedly.
funded by the lottery.
Yeah, and so you have, the lottery.
Notice my shock.
You have a bunch of those very teeny tiny, they're publicly known, like, okay, the tax on tobacco or alcohol, the sin taxes.
Ooh, can we talk about those?
Yeah.
What happens when everybody quits smoking? How are we going to pay for stuff?
No, they're the tiniest little sliver of the budget. They mean virtually nothing to the overall funding of our school.
Then why don't we just get rid of them?
We could, but the whole idea is you're trying to
Manipulate people's behavior by taxing it?
Yes,
That's what
I call
government does.
bullshit.
That's what
I call
government does
bullshit.
best.
Yeah.
I mean, and that's where there's the end.
Justifying the means.
And do I agree with that? Not necessarily.
The road to hell is paved with good intentions. I think we've heard that before.
Yes. And I want to get rid of all those good intentions.
I see. Okay.
But yeah,
that you decide for yourself.
the absolute bulk of our state revenue is the individual income tax and
Okay.
then the sales tax. Those are the two biggest.
That's the big money makers for the
Yes.
state of Michigan.
Yes, and then you have a couple others. Well, I'm drawing blanks on, but I mean, then you have some of the smaller. Now you do have the corporate tax,
So-
that goes to the general fund.
And I would like to talk about that too. Corporate tax. I have some notes in here. Hold on. I feel like, pension tax. What about inheritance taxes? All of that
That's
jazz.
federal,
Is that not real?
I believe
The
inheritance is
inheritance tax is federal.
federal. Yeah,
Oh, not state. Okay.
Right. The pension tax, though,
What is
Snyder's
that even? I don't even know what that is.
retirees now get taxed on their pensions in the state.
Do they already pay taxes on that money?
No. So prior to Snyder taking over with the Tea Party wave, pensions were not taxed as income. Part of their shared sacrifice mantra, they then introduced a pension tax that treats it the same.
Was this a situation where people opted into a pension
Yeah.
with the belief that they didn't have to pay taxes when they got it out, and the rules got changed
Yes.
after their money was already in?
Yes.
Scandalous.
But the vast majority of people, especially these days, no longer have pensions
Right.
and 401k.
For
So
sure.
honestly,
There are some legacy. There are legacy
there
employees that do though.
And, under I would get rid of that, to be honest. I know it's just a small percentage of people and income, but it's still.
I'm the type that, I disagree with Governor Whitmer here because she's been pushing to get rid of it. I don't think it's necessary to fully eliminate the pension tax because it's treated the same as any other income. If my preference to see the tax burden shift towards the wealthy were to occur, then okay, so by increasing the earned income tax credit, or
what is that?
So the earned income tax credit is for working families. For the more you make up to a certain point, then the larger your tax credit is, and then it starts to decrease back down. It's a federal program, and so at the state level, we have a matching of it. So right now, I think it's 6%. So whatever your federal earned income tax credit is, so a tax credit means it's not a deduction. It doesn't decrease your tax burden. It's actual dollars, going towards your tax bill. And if you end up
what is the difference? The net result is the same.
No.
Walk me through this.
Yes.
Give me real numbers, though, not the hypothetical.
Okay. So let's say you made $50,000.
Yes.
And you have a $5,000 tax deduction. Then your income is going to be taxed as though it's $45,000.
Yes.
But if instead it's a tax credit, you then figure out, okay, what is your tax burden at $50,000? And it may only be, let's say, $2,000. You get a $5,000 credit, so you're getting $3,000.
It's like seller
back.
concessions.
Yes, exactly. Yes.
Instead of purchase price reduction.
Exactly.
Love it. I'm a real estate broker, so this works for my brain.
Yeah.
Okay.
I'm not a real estate agent, so.
Okay. All right. That's right.
But yes, so our earned income tax credit is 6% of the federal earned income tax credit. So whatever you calculate for your federal, you get 6%.
So a tax credit gets more money for the state than a deduction.
No.
Yeah.
A tax credit.
Reverse.
No.
Right, is the state writing you a check.
Yes.
Well, I know, but they're writing you a check on an amount that you are taxed. So if I'm paying taxes, hold on.
So if my bill is $2,000, but I get an earned income credit of $3,000, the state's going to write me a check for $1,000.
Well, I understand, but the rate that it's calculated on is $50,000 instead of $45,000.
Yes, but it is something that.
Why do they do it that way instead of just reducing your taxable income?
Because it's about encouraging people to work if you're low income.
I see.
So if you're making $20,000 a year by making
and the
$30,000
expectation
a year,
is that
you make an even larger earned income tax
and
credit.
the expectation, this is cute, is that the average worker understands this. Right. Like, come on, this is so Byzantine and stupid.
A lot of accountants don't understand. But.
You just heard me going like, duh.
But that's where, if we increase, from 6% to 10%, what we're calculating is the earned income tax credit.
So where's that money going to come from?
So that then is going to decrease the tax revenue coming from working families. Okay. And then let's say we also increase the homestead property tax credit, which, under Snyder, they decreased the threshold, I think, from 80,000 down to like 60,000. So if we instead, restore that and put it up to 100,000. So families earning less than 100,000 a year, they can get this property tax credit. So their tax burden decreases. You want to decrease the tax burden on people. Then, okay, we need to make up that revenue somehow.
So you're saying,
yes.
So hold on. John, you're saying get rid of property taxes. Jordan, you're saying make it so only some people pay property taxes.
I'm saying shift the burden. So you're decreasing the income tax burden off of working families and the middle class.
You're saying only some people should pay property taxes. I'm sorry. I'm just shitty with you for a minute. But.
No, because it doesn't affect property taxes.
Okay.
This is all about in the income tax stream.
It's on the filing side.
Yeah, it's on the filing side. And so if you...
The cup in the ball game.
Yeah, so I still pay property taxes, but I get that credit back at its state income is what he's trying to sell.
Yeah, that's the homestead property tax credit. And right now you have to be under 60,600 to qualify for it. It should be, higher, so it's really there to help the middle class as well. Because the middle class, as a percentage of their income, they pay more in property taxes than somebody at the high end of the economic spectrum or somebody at the low end. So property taxes really traditionally hit the middle class the hardest. And so a homestead property tax credit should be geared towards them, in my opinion. But then if you do these things, so you're decreasing the tax burden on working families and the middle class, then you can increase the income tax rate from 4.25% up to 4.5% or 5%, which then will definitely make up that revenue. It's shifting the tax burden onto the wealthy. They'd be paying a little bit more.
So, do you think the wealthy run a lot of their income through their businesses? Let's talk about corporate taxes.
I would say so. And, just kind of round out on that pension thing is I don't think a lot of wealthy people have their income tied up in pensions. It tends to be the people that are, of lower class that want that guaranteed monthly income, whatever it is.
Yeah, trying to figure out how to still afford to live when you're done working.
Right. And that's why I don't think you need to eliminate the pension tax. If instead, if somebody's got a pension and they're making $60,000 a year on it, then by increasing, those other things that are shifting the burden off of people making $60,000, they're getting those same benefits of that tax relief.
Right.
Even though they have a pension tax, they get the same benefits as, because to me, it shouldn't make a difference whether somebody made that $60,000 by working that year or it came through their pension. Either way, their tax burden should be the same. It should be lower than it is right now.
Except those people that put that money away did so at a different time. They paid a different way earlier in their lives.
Yeah, in kind of today's vernacular, would be like starting to tax your IRA that's, put in after taxes.
Yeah, the Roth IRA.
It's changing the rules.
Yeah.
So it doesn't feel good for sure.
Right.
Which isn't right, in my opinion.
Yes.
Okay.
Yeah, in theory, now most of these people with pensions are public sector workers.
Yeah.
Traditionally, the public sector, the way that they've been able to recruit individuals to work for the government or just
everybody wants to work for the post office, right?
well, because traditionally they had a better benefits package at a lower salary, and so I serve on the library board. We don't pay great competitive salaries if you just look at the salary, but then libraries offer typically really good health insurance and great benefits to the employees to kind of make up for the fact that the salary is going to be a little lower.
Yeah.
All right. So where were we going? You were saying to round out what?
You wanted to do corporate, I think.
I do. Yeah, I want to keep talking about the money.
Yeah. I just wanted to say that thing on the pensions. That's all.
Okay. So let's talk about corporate tax finagling.
Okay. So yes, I believe that most of the wealthy, the Warren Buffetts and Bill Gates of the world,
yes.
There's more. Obviously.
I feel like they're just such anomalies. Like we're using a really extreme example, and who are our local? Can we?
Okay.
The Illiches.
Right. Okay.
Yeah.
The Manny Maroons.
All right.
Let's see, the Vosses or
Sure.
whatever. Name a local billionaire.
I wish I knew them. If there are any out there and you need to buy a house, I'm your girl. Let me know.
In Livingston County.
That's right. Greater Livingston. I'll go about 50, 60 miles out.
So
anyway, corporate taxes.
So yes, they do probably run most of their money through businesses, and they probably spend a lot of their money through these businesses.
As a business.
So because they can get tax deductions for that. So if I go buy a computer, I don't get a tax deduction through it. But if I were to run it through a business, I do. Mm-hmm. So and those deductions seem to incentivize people to start businesses, which is good economically. However. Yes. But, so they not only get that deduction, they're spending less money on taxes, right? So if you go to a sales tax type of thing, they're guaranteed to pay an equal number of taxes, as well as... So instead of opening businesses, they need to open nonprofits or churches to avoid that too. Yes. But here's something else that they do. They pass all those taxes on to the customer, making their prices go up, making it harder.
Which taxes?
Any tax that they pay.
No, they do not, in my opinion.
Slow walk it. Bought the computer. I have ABC. I almost said ABC Warehouse. Let's call it 123 store. Okay. Yeah. So, in order to make a profit, I got to charge my customers more than what I pay for the product. Right? Yes. Yeah. That's your margin. If I want to make, say, $100,000 a year after taxes, I'm going to raise my prices a little bit higher. I disagree with the economics there, because a business
is going to be self-interested.
Yes.
They are going to maximize their profits. They are going to set their price in a way that maximizes their profit in the end.
Yeah, and I'll agree with you there.
Okay. What percentage of income tax or tax they pay on those profits does not change the calculation of the price for their products that maximize those profits. So if you're charging, 10% of a corporate tax, now it's 6%, but if you were to increase it from 6% to 10%, that doesn't change what a business, their actions would be to still maximize their profits, what price they're charging to the customers. They can't pass that on because in theory, if they could pass that on and make more money, they would already be doing so because they want to maximize profits. So any tax that's applied to profits, you have to trust then just basic economic theory that it doesn't affect what the business is going to be doing. It's going to determine whether or not, they view it as a worthwhile investment of capital. And so over the long run, you may see, different businesses leave the market because they weren't making enough after-tax profit. But the price to consumers does not change.
Okay, I understand where you're coming from, but it's still, if I want to make that end net margin, net profit, I'm either going to have to raise my prices a little bit, or I'm going to have to drive in more customers somehow.
But why wouldn't you have done either of those options even if there wasn't a tax on your profits? Why would you intentionally leave the opportunity to make more money on the table? Like you're saying as though a business sets a goal of we're going to make this much, and once we make that much, we're not going to do anything to go above it. No, a business is going to shoot for whatever they can make profit-wise.
All the money.
Yeah. And so they have a target, a goal, but they are not constrained by it. It's not as though once they make it, now we don't need to charge anymore because we've made our goal.
Okay.
Can we do it go ahead.
Okay. I'll try it this way. Okay. So even under what you were saying, that they're not going to, it's not that as a customer, I don't pay for it.
Yeah.
Okay. So, sorry, my taxes go up from say 6% to 10%. Mm-hmm. Well, and let's say I make $100,000 a year, so that would be what, $4,000?
Yeah.
So I know that $4,000, I may not be able to buy a new fridge for my restaurant, so that would affect the businesses and my customers in the long run.
Yes.
Okay. So I'll try it. That's me trying it a different way to explain what I'm trying to say.
If we were in an era where corporate profits were relatively low, and so there's not enough capital available to reinvest in companies, that argument would make sense. But we are in an era of record high profits and businesses making more money than they've ever made before. The access to capital is not a constraint that is really determining what businesses are doing. If a business wants to go out and pay for that fridge, either they have the funds because they've been doing great, or there's a lot of money available to borrow against. Right now, the ever since the crash on the recovery, since 2008, money has been available, access to capital is there, and so it's only if that's restrictive does your example actually work out that way.
So let's just pretend that I open the Rachel Widget Shop.
Yes.
And I buy widgets for $5 and I sell them for $10. Yes. On every widget, I'm paying taxes on the $5 purchase price as a sales tax. Yes. And I'm let's say I have no overhead. Okay. I don't cut myself a salary and I don't have to buy any shit for my company.
Yes.
It's magic. It's the magic widget shop. Okay. So I'm making $5 per.
Yes.
In this hypothetical business model. Yeah. If I'm paying 4%, no, it's now 6%. That's how old I am. I'm paying 6% sales tax in Michigan.
Now you have the sales tax of 6%. You also have the Michigan business tax, which is 6%, which is on taxes.
On the profit.
On profits.
And I was going to get there. So I'm paying 6% to buy my widget for $5. Yep. That's 30 cents.
Yes.
And then on the $5 that I made, I'm paying 30 cents.
You only made $4.70 because of the 30 cents.
Because I took the deduction. So that is where
So then the
So you're
$4.70
making-
is profit.
which is, so what's 6% of 470? Quick.
It'd be like, 29
Do the math.
cents.
Is it?
Something like that, yeah.
Good job. This is why I don't work in a title. I don't do the math. So if the sales tax goes up, and that, John, was that your
Yeah.
Yes.
proposition?
Yes.
So if sales tax goes up, instead of making 30 cents, the state makes $1.
Yeah.
Yeah.
And
And then,
You'd be eliminating the 29
but
cents.
we're
Yeah.
losing the 29 cents. So this is actually,
Well, that would cost the business more. Yes.
it would cost the business
no,
more.
but
it-
here's the thing.
but-
Right.
The business wouldn't be paying for that. The customer, me, would be.
Yes, because so you could have it structured
Well,
where
hypothetically,
the $5
but in the
widget that it
Hold
cost
on.
you. Yeah.
you said the customer would be paying it.
Right. Not you.
But if I'm buying the widget for $5, I have to pay a sales tax.
It would be the final customer that pays it, not
Why?
the intermediary.
So in economics, in theory,
I don't want theory. In reality, I have my widget shop
so
that's
you-
magic,
if
and I
you're-
buy a $5 widget. I have to pay taxes on the $5 widget.
because now that widget costs, I'm sorry, it would go up to 50 cents, not $1.
Okay.
No, but the dollar would be all the sales on the final product.
No. Stop.
Oh, when you go to sell. Okay.
No.
Sorry. Yeah.
So,
But
no, on
when I
her-
buy it, if you change the sales tax, and I'm just buying widgets from my neighbor Bob, I buy Bob's widget for $5. He's my supplier. I pay a 10% sales tax to him. No?
under what I would
Yes.
like, okay?
Yes.
Only the final customer would pay.
So
But I'm a customer.
Yeah, you are a customer, but you buy from, say, Jordan.
Yeah.
And then I buy from you.
Yeah.
So,
she doesn't.
so
I
she
don't
would,
pay-
so
I
you
don't
wouldn't
pay a sales
for the
tax?
sales tax. I would.
But that's not how that's not even how it works right now. Like right
That-
now,
that's
if
what-
I go to Staples and buy a printer for my business, I pay taxes on it.
That's how I would want. That's
So
how
you're eliminating the tax for the business
Yeah.
purchase and putting it so the end user, I would never be an end user. I would only buy everything through my business.
So what does that do? What is the ends that are achieved? It further exacerbates the wealth gap in consolidating wealth with those businesses because their
So
tax burden is eliminated.
Slow walk the real example.
Yes.
So
I'm
yeah, I honestly I didn't think about what you were saying.
Walk it
yeah,
all the way
yeah,
through.
So for under your example, to kind of help with that wealth gap, I guess I would have to charge that business that
charge the
10%.
business.
Yeah.
Yeah.
So you're talking about, now I forgot what your solution was.
My solution is just in the income tax system that we have.
Yes.
We have a flat sales tax or a flat income tax of 4.25%.
Yes.
And so by increasing tax credits like the earned income tax
Yes.
credit and the homestead property tax credit, you can decrease the tax burden
Yep.
on working families in the middle class. And then that allows you to increase the overall income tax rate to, let's say, 5%.
But that's for people. We were kind of talking about business taxes.
So businesses, I mean, I would, increase that, from 6% to maybe 10%.
And that would be
I
on the
haven't
profits.
worked the number.
No, of
Yeah,
course.
but yeah.
On the profit side,
Yes.
not on the
Yes.
sales tax side.
Right.
Okay.
Yes. Because a business, now you do have businesses are more easily able to relocate than people, typically speaking.
Okay.
So, and the Michigan business tax is not such a great revenue generator for the state that it's necessarily what I would use to generate more revenue because
Gotcha.
even if you were to double the amount of money that comes in from the Michigan business taxes, that's a smaller drop in the bucket than increasing the sale or the income tax
Okay.
up to 5%. But if you're increasing the income tax up to 5% and increasing the tax credits along with it, so the burden is not any
So you're
heavier.
keeping the money coming in. You're just pushing the burden, redistributing it.
Yes.
I understand.
So it's more so on the wealthy because, somebody, if they're going to leave the state because, their income was only taxed at 4.25, now it's going to be 5%. I don't think that us as individuals really perceive that as being a major part of the calculation of where we live. When we go to, to decide where do I want to live,
Most of us just live where we landed.
But if you're going to relocate, you're going to see, okay, how much, what is my salary going to be in that? And, if you're comparing, if you have job offers all over the state, including in Michigan, the odds that a job offer, the discrepancy between two is like a 1% difference, where then, now because Michigan has a 0.75% higher income tax rate.
I would argue that people move because they want to, not because of tax percentages.
Right. So by increasing the income tax up to 5%, you're going to generate more revenue for the state overall. You then have the earned income tax credit and property tax credit to decrease the burden on the middle class. That helps achieve the end, or at least reverse the trend of the growing wealth gap. That's what I want, is to stop the growing wealth gap. This is one mechanism we have at the state level where we can do it. It
just starts to sound very complex and intentionally Byzantine.
Yeah.
So that your regular people can't track it.
But the status quo is Byzantine. Yeah.
No, I understand. And I'm not throwing you under the bus. I'm saying it's frustrating when you're trying to talk about wealth redistribution to have to do all of these freaking levers that your average guy who's going to work every day and being crushed by the system doesn't understand how to work it to his benefit.
And that's one of the reasons why I like that sales tax, because it makes everything simple.
It levels, theoretically on paper, it looks like it should.
Basically, if I don't want to pay taxes, then I don't spend money.
Right.
But the
simplifying it.
Working families don't have that luxury of choosing not to spend money. Whatever income they're bringing in.
No. I think the intention is more about clearing the muddy water so people can understand.
Oh, yes. Yeah. As far as it eliminates the Byzantine tax code for
eliminates all that and
almost like burn that bitch down and we'll start over.
Right.
Something like that.
Yeah.
So are there any other places where tax credits make sense for doing what you're talking about doing?
You have like the home heating tax credit, which is another one for working, lower income individuals. You do have tax credit, but as far as the larger
drivers of the economy,
the things that are in our current income tax structure at the state level, you only need a couple, because the more you add, the more Byzantine it becomes. If instead you have a couple levers to decrease the burden on these populations, while you have the overall income tax amount being the blanket that's a burden on everybody, by easing it on some, that's how you can then shift the balance and rechange the status quo so it's not shifted. The fuel tax right now. The fuel tax is one of those, like a sales tax on every gallon, 27 cents. Now, in many ways, a fuel tax is justified because, of what it is required to go to funding-wise. It's paying for the roads. It's paying for the transportation, because that's another one of those big, along with the Health and Human Services and the school aid fund, transportation is another big expenditure appropriation. And so those funds, though, constitutionally come from the registration fees on vehicles and the fuel tax. So you can decrease the burden on people by decreasing the fuel tax, but at the same time, that's kind of a fair usage because it's driving the expense on the other side of, the roads are getting in worse shape because people are driving on them.
Yeah, and
charge the people who are driving.
Because cars are getting better gas mileage, we're spending less in gas. And now there's a huge push to go 100% electric. Mm-hmm. Well, where's the tax for the roads coming from now?
Right, and it's all vehicle registration fees that would be left, which is not enough to fund our
so what would happen is that they'd quadruple the registration fees. The number might be a little off, but
they recently increased it like 20% a couple of years ago. Yeah.
So, and you're going to see more and more of that.
And when it comes to user fees in that regard, you're using the roads, you then have to pay a user fee. Yeah. That makes total sense.
Oh, I agree.
But when it comes to funding just the general government and things like the safety net, where you can't charge the people who need the safety net for the safety net, that's the whole point. Or things like our education system, where it's not just parents who benefit from having a quality education system. It's the society as a whole. So you've got to put that burden on society as a whole to pay for, provide for it. It's not a user fee at that point.
Okay. Yeah. Okay. And I agree that there should be some public education. We probably disagree on what level that, would be, but